Well, the market continues to be optimistic about a new stimulus package, even though it's likely to be only half of what was proposed before the election. At least it shows that now we might be able to see some agreement from a bipartisan perspective. So meaning the Democrats are going to be willing to work with the Republicans. We expect to see stimulus before the year is out, and then possibly the prospect of additional stimulus once Joe Biden has been inaugurated. So I think really it's more a vote that Washington could return to some sort of a compromising fashion. Well, I think when investors do start to move into low quality stocks, the implication is that they are feeling much more confident that the economy is recovering, that it's on the ascent, and that those companies that were priced to go out of business are not likely to do so and therefore represent the greatest price appreciation potential. I think also they're willing to look to IPOs because, again, it's another form of risk taking, voting as to how these companies might end up improving over the next several quarters or even years. So it's an indication usually that the market has further to go to the upside. Well, right now, it does appear as if investors are pretty optimistic. More than 85% of the companies in the S&P 500 are above their 50-day moving average. Also, 95% of the sub-industries in the S&P 1500, and there are about 150 of them, are above their 50 and 200-day moving averages. So that's a level of excess. That makes the market vulnerable to some sort of digestion of gains. I don't think it means that we are risking a severe decline in the stock market, but I think, should something come out of the ordinary, or maybe even we end up with the Democrats taking control of the Senate in early January, it could actually set the market up for some sort of a short-term tumble. Well, this year has turned out to be a pretty good year. Through December 7th, we have seen the S&P 500 up by 14.5%. That's compared with the average of less than 9% going back to World War II. So that's a very nice return. So I think looking into 2021, yes, we could end up with a similar low teens gain in the next 12 months. And I think it's because we end up seeing an improvement in the economy and earnings primarily in the second half of the year. So investors might push up prices early in the year in anticipation of improving fundamentals later on in the year. Well, when things look too bullish to a wide number of people, then usually something goes wrong. The market tends to disappoint the greatest number of people at any one point in time. But I think that longer term, meaning between now and the end of 2021, yes, the market will be higher. So investors who are investors and not traders can probably put some money to work today, realizing that we could end up going through a selling spree in the near term. But if they hold the course, they will be rewarded a year plus from now. In terms of traders, well, since I'm not one, I can't give any specific advice, only to remind them of the old adage that we do end up seeing a mid-December low traditionally as investors take profits before the end of the year.